Good morning, students. We want to look at a few other calculations. They're not really ratios, but they're calculations that are on your sheet, and so we want to take a look at those today. First thing you need to do is to go to Wolf Den, and let me pull that up for you, minimize what I have. Oops. Okay, back to this. Here we go. Go to your Wolf Den. And what you need to pull up is the other ratio PowerPoints and this handout on the Bartlett financial statements. So let's take a look at what I have there. First of all, your PowerPoint statements begin with Baker Corporation. So we're going to be using these financial statements today. We'll use the income statement, we'll use the balance sheet, but we will not use the statement of cash flow. And then the calculations you can review for what I'm doing today are on the following slides, starting with slide 6. So you can go through and see exactly what I've done today in the numbers. Now the other item, I'm going back to the financial statement, the other item that you need is going to be the handout on Bartlett. Let's pull that up. And at the top of the page, I had given these out in class. If not, print you out another copy. Are 3 calculations. We want to look at net operating profit after taxes. We want to look at operating cash flow. We want to look at free cash flow. Okay, so let me pull these down and look at these from the perspective that I have. Sorry, this is hard to do, holding this phone and doing this information. When I say for later, this is for Wednesday, October the 5th. Okay? And the first calculation is actually one that's used in the second calculation. So that's really the only significance it has here. This is called net operating profit after tax. Okay? Net operating profit after tax. And what we want to do is find in our financial statements earnings before interest and taxes. Now, this is also called operating profits. So come to the income statement, and it tells you earnings before interest and taxes. This is what has been earned in the company before you pull out your interest that has to be paid to the bank and your taxes. But it's also called operating profits. So when you go to your homework for tonight, let's pull up the Bartlett, go to your homework, you're going to see it called operating profits. You want to use this number 418. That's also called earnings before interest and taxes. You need to memorize that and know it. So let's take the number from Baker, earnings before interest and taxes of 370. And we want to multiply that by 1 minus the tax rate. 1 minus the tax rate. Okay, now, in the videos, let me go to the videos. You're going to find that the tax rate on line 6, on PowerPoint 6, is 40%. So this is on PowerPoint slide 6, it says 40%. So let's use that calculation. Most of the time that's what we'll use. Move your decimal place 2 places to the left. So 370 times 1 minus 0.40. That means you want to multiply 370 times 60%. And when you do that, what you're effectively doing is you're pulling out the taxes. And the number that you would have here is 222. So that number is net operating profit after taxes, and it will be used in the next formula. So pull it down. We want to use that in the next formula. Okay, the next formula that you've done, we've just done one. So let's do the second one. This one is called operating cash flow. Operating cash flow. Okay, this is the amount of cash from our operations. And we're starting out with net operating profit after taxes, and we want to add back to that an item that's been subtracted out in our income statement, but it does not involve cash. That's depreciation. Depreciation is merely a number that is allowed to give companies the benefit of reducing their taxes. However, we don't pay out any cash on depreciation. It's the formal definition is taking the cost of an asset and allocating that cost over the useful life. Now, let me show you where to find that number. Go to your income statement, and there is a line that says depreciation expense. Here it is $100. Okay, here it is $100. So add that back. Okay, and that's going to tell you that operating cash flow is $322. Now that's truncated. If we were really dealing with this, we'd put 3 zeros behind it, and that would be $322,000. That tells them, the company, how much actual cash they have from their ongoing operations. The actual cash that is involved, that they have available from ongoing operations. Now that's before they pay any interest, that's before they pay any taxes or give any dividends. Okay, so actual cash available. This is cash. I'm having a hard time writing here. Cash from operations. Okay, cash from operations. Okay. Now, depreciation on your statement, let's just take a look at where you want to look at. Go to Bartlett. You want to go to your balance, your income statement. Income statement is the best place to find this. Go to income statement, look for depreciation expense. That's going to be $239 for the year 2012. Okay, income statement. Now, the last calculation here is what's called free cash flow. Let me pull down here and try to write this out for you. Free cash flow. And you can also go to the PowerPoint slides to get further information on this, so read through those. This is the amount of cash available to investors for dividends. Okay, so the amount of cash available to investors for dividends, and that's what we want to look on this one. Now it's a little bit more complicated, good bit more. What you want to do is to use the number in 2, operating cash flow, which is 322, and we want to make some adjustments. We're going to subtract out some things. First thing we want to subtract out is our net fixed asset investment. Then we want to subtract out our net current asset investment. Okay? Fixed assets are those assets you're going to use for a long period of time. So go to your balance sheet under the assets, and let's look at the 2 categories. Current assets would be those that you use for a year or less. Fixed assets are your long-term assets, land, building, machinery, and then you subtract out depreciation. So notice net fixed assets, $1,200 for this year. Now that would have 3 zeros behind it, and $1,000 with 3 zeros behind it for the prior year. Now what we want to do there is to subtract those 2 numbers. That's going to give you 200 there. Okay, so you want to subtract those 2 numbers. Change in your net fixed assets. And then we want to add back the depreciation. Now remember, depreciation was in number 2, so you can get it there, or you can go back if you want to see where it came from. It came from your income statement. Here it is on your income statement, depreciation expense. So add that depreciation back. This number will be 300. Yeah, 300. So we have 322, which came from number 2, and then we have 300, which comes from this calculation. Now we have one more number to subtract out, and that's our net current asset investment. What have we invested in assets for the current period? Okay, now it's very complicated here. Okay, net current asset investment is going to be you're changing your current assets minus some liabilities, which would be your accounts payable and your accruals. So we need to get the difference in these numbers, subtract it from these numbers, and that's going to give us what we're looking for. Now, first of all, let's look at the current assets here. Go to your balance sheet. First number for the calculation will be 2,000 minus 1,000. Okay, that's going to be your total current assets. That's going to give you 100. Okay, so that's your change in your total current assets. My cat has decided to walk across my work area here, so let me put her down. So you have 100 for the change in current assets, and I showed you how to get that. Go to your current asset line. Again, here it is. 2,000 minus 1,900. That's for Baker. Okay. Now, this is the part that's complicated. They want the change in accounts payable and accruals. Okay. The change in accounts payable and accruals. So let's go to the second part of your balance sheet. Liabilities and equity here. Okay, now notice you have three items: accounts payable, notes payable, and accruals. The most commonly found on your liability, your current liabilities, would be your accounts payable, which is what you owe within this year for purchases of inventory or supplies. And then accruals would be things that we have brought forward that we haven't paid for yet, such as maybe owing wages for work, and maybe the work period ran over a holiday and we haven't paid our workers yet. So that's what an accrual is. Now, what you want to do is you want to take and add those two numbers. This one is for 2012. So the 700 on accounts payable plus the accrual would be 800. And then for 2011, you have 500 plus 200, which is 700. Once you've added them, then you want to subtract. Okay, so you want to subtract those two numbers. 800 minus 700 is 100. Okay, so the first process is to add the numbers together and then subtract them. That gives you the change when you subtract. Okay, your number here is 100. So let's take that back to the formula. Here we have the change in current assets minus the 100 I just showed you, which is the change in the accounts payable and accruals. Now, that means that the net current asset investment is 0. They wash out here, 100 minus 100. Okay, so it's 0. Now take that 0 back up to the formula we're looking for, free cash flow, which was 322 from number 2, the 300 from the calculation below, fixed asset investment, and then net current asset investment is going to be 0. Okay, and that came from this last calculation. So 322 minus 300 minus 0 means free cash flow is 22. If you were to put 3 zeros, that means you have $22,000 in cash that can be used to pay out dividends. Now, we will not pay all of that, but that's the cash available to investors for dividends. And again, that won't all would be paid, but at least we know we have it. So 22. So let's do a review of the numbers that you've calculated. In number 1, you had 222. If you put the 3 zeros, 222,000. That's net operating profit after taxes that's used in the second formula. Second formula is operating cash flow, which is 322. That's 322,000. That's what we have in cash from our normal operations, but then we have to pay interest, we have to pay taxes. So we want to know how much do we have available to pay our investors dividends. So from that, we get 22 or 22,000, which is free cash flow, which is available for dividends. Okay. Now, I know those are tough calculations, especially on the end. Okay, and you need to take a look. Let's just take a look at Bartlett. And that last formula, you need to first go to your balance sheet. You're going to look at the difference between your current assets here. And then you need to look at the liabilities. And you're going to add accounts payable and accruals for each year. And then you want to subtract them. And then that number will be subtracted from the difference in your current assets. So that last calculation, that's where you're going to get your numbers from. So I want you to take this formula sheet and do these calculations for homework. Net operating profit after taxes, operating cash flow, free cash flow, show all work. Okay, have it available. I'm not exactly sure when I'm going to take it up or how. I'm looking at possibly maybe my husband coming Monday, but look for emails on Thursday and I'll give you further instruction on that. Please do go back to your PowerPoints and take a look at those, because all of this information that I just went over is explained in the PowerPoint slides, and it would be very helpful to you. This is just a little information on free cash flow that I thought was interesting, and then here's your homework. Okay, do that for Friday, and I will give you more instructions on Thursday. Okay, have a good day.